We are live. If someone can post the YouTube link in the virtual trading floor, I appreciate it. And I'm going to get started with the disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. No shorts on. Would have been nice to have a short today, or I guess over the weekend, just with the way the market gap down. But I actually thought things were looking pretty good on Friday, and then obviously there was a lot of news over the weekend. So let's talk about it. Let me start. I'm probably going to reiterate a lot of the information, a lot of the thought process that I kind of laid out this morning. When I was talking about, today's kind of game plan and just my general thought process, I think it's good to go over it again just because, the morning meeting is always a little bit rushed because I'm trying to get through everything in 30 minutes, including our big picture game plan, all the trade ideas I have, reviewing all the trade ideas that you guys have. So, first of all, where the market's closed today, SPYs are down 0.9%, Qs are down 0.8%, IWM is down 1.25%. We are well off of our lows with some interesting looking daily candles. I don't know why I'm getting a false tail here on my daily candle on the SPYs. This is really just a hammer kind of in space. I guess really off this like 450 support, but it's really just a hammer candlestick here for the SPYs, which is a bullish candle. Qs with a smaller candle, breaking below these pivots but closing above them, and the IWM here I think is a really nice looking candle today, even though the Russell was down more than the NASDAQ. A really nice looking candle. So thanks, let me switch my my view here. We go to this view, and then you should be able to see all the tickers, and you should be able to see me. I see there's a glare on my, there's a big glare there. Give me 1 second and close the blind. All right, that should be better. Okay, so it was pretty clear. So first of all, Friday, because there was no afternoon meeting on Friday, I was really optimistic on Friday based on the way the market traded. And I know that the S&P and the NASDAQ in particular were down on Friday, but I'll tell you why I was optimistic. I got exactly what I was looking for on Friday for the first time, which is that money came out of FANG names, particularly money came out of Apple. Apple was weaker, right? The NASDAQ closed red. Microsoft was also kind of a little bit weaker. And the IWM was able to have a green day, and not only did the IWM have a green day, it was the money rotation, right? Money rotated out of Procter & Gamble, money's rotated out of Apple Thursday and Friday last week, and on Friday, we really saw a bid come into those speculative names. It was the first time we actually saw that type of money rotation come into the market, which I feel like my timing keeps being kind of slightly off on this stuff. I thought that would either start directly Wednesday once the Fed was done, which we did see that on Wednesday initially, right? We saw that immediate big rally, but then Thursday we sold all the way back off. So I thought that would either start on Wednesday as soon as the Fed meeting was over, or we had to wait until this week. Basically, today, tomorrow type of situation. And my timing seems to just be like a little bit off with this because we caught the big rally, but it was very broad-based on Wednesday. We had a big sell-off, which was also very broad-based on Thursday. And then Friday was that first day where I kind of got that rotation that I was looking for, and that left me feeling optimistic. We saw money come out of the fear trades, right? Procter & Gamble is a fear trade. The XLP, this performance in the XLP is a fear trade. Honestly, even the performance in Apple has been a fear trade. And we saw that money come out of Apple Thursday and again into Friday. So I felt like really optimistic on Friday, even if my timing was off, right? I kind of didn't think it was going to happen Friday morning. I didn't think it was going to happen Friday. I thought we had to wait until this week, and it did happen on Friday, whatever. So feeling really optimistic when the market closes on Friday, just for a whole bunch of not great headlines to come out over the weekend where it seemed pretty obvious before the market futures opened up for trading last night that we were going to be trading lower and we were going to be trading down. And it was two major things. It was Omicron, basically coronavirus is spiking to an insane degree, and also the headline that the Biden infrastructure deal does not look like it's going to be getting done anytime soon. But if you do some real investigation into this, there's a little bit of a silver lining in both of those things that maybe makes it not as bad as you think. And then the question coming into today was if the market's able to realize that silver lining at 9:30 this morning, or if it takes them more time, which a lot of times it does take the market a little bit of time. And that's a big thing that I was saying when I kind of laid out my thesis was, okay, here's my thesis, but we got to see if the price action today really confirms it. So just to review some of these major points here with the market. So coronavirus. The coronavirus headlines are scary, especially for anybody who traded in the sell-off in 2020, right? The sell-off, February, March 2020, it was like the most brutal thing I've ever seen in my trading career. Though, honestly, the way that they've sold off the spec names in the last two months, I feel like in some ways is almost close to it, though it's different. So when if you traded though in March 2020 and you see the numbers coming out on coronavirus in places like New York City over the weekend, it's scary. We had, I think on Friday, the single highest infection rate or whatever, recorded infection rate since the pandemic started. And there is Delta out there that's acting strong, but it really seems like it's this Omicron. And to me, though, I still go back to that thesis that we had originally read from the analyst Kolonovich from one of Pat's morning meetings when he wrote this up, that Omicron really coming online in a bigger way is not necessarily the worst thing in the world because it can push Delta out, and it's significantly more contagious but significantly less deadly. And I even had a science lesson in the morning meeting this morning where I talked about why that is, right? So just really briefly, Omicron affects the bronchus more. That's where the virus particles are primarily located, and the bronchus is the bigger passageways, like after your trachea, that then lead into the bigger kind of lung tissue, as opposed to Delta, earlier versions of COVID, really got into the alveoli, which is the smaller sacs, which is basically where the oxygen goes into the bloodstream and the carbon dioxide comes out of the bloodstream into the lungs for expiration. And when the virus is in the alveoli sacs from Delta or the original coronavirus, the body's immune system response, which is a typical immune system response, is basically swelling, and that leads to fluid getting into the lungs of the alveoli. And what that therefore creates is basically like pneumonia, which is deadly. And that's why the coronavirus has been so dangerous. The Omicron, and again, I'm not saying for people to go out and take extra risks. You don't want to get this. There's plenty of other side effects that are not good, but the Omicron primarily being in the bronchus means that instead of getting more of a pneumonia-like sickness, you're getting more of a bronchitis-type sickness. And there's a really big difference there, though, just in terms of if you're a healthy person, it's the same way a healthy person could die from a really bad cold, or same way an immunocompromised person could die from a flu or a cold. You could still die from the Omicron COVID, but it's going to be more like that than this thing just coming in and just wreaking havoc and killing everybody. But the flip side about it, when we're thinking about hospitalizations, so a big scary thing, right, especially in New York City right now, is like, if you have something wrong with you and you need to go to the hospital, like, it's hard to get help because they're getting overrun. And part of the reason why they're getting overrun is just because Omicron should lead to just so many more cases than we've ever seen before. And if a percentage, even if it's a smaller percentage of those people are sick enough where they need to be going to the hospital, you could still kind of be putting these hospitals at capacity, even if it's a significantly lower percentage of people who need to get hospitalized. That's why it's still important for people to do their part to try to not transmit this virus to other people. But broadly, I don't think that this is a thing that we should be panicked about in regards to markets. And if the only reason why the stock market is down is Omicron, I'm a buyer, without a doubt, because it just isn't as bad. But it's not just Omicron that's affecting the market. There's been a whole confluence of factors, and we've spoken about these factors many times. Some of those we're finally getting through, which is also making me more optimistic here into the end of the year, right? We're getting through our tax loss harvesting. That should be primarily done. The insider selling, which has been such a big thing in 2021, which I think is actually partially related to the potential of higher taxes in 2022 from the Biden plan, is primarily done. And now, which is even more interesting, is maybe they didn't need to do as much insider selling as they needed to, because now it looks like Biden's not going to get this done, right? So the downside is, when it looks, Goldman Sachs, they downgraded their GDP forecast for the United States based on the fact that the Biden Build Back Better infrastructure deal, whatever you want to call it, is now not getting done. So that would have pumped a lot of money into the economy. So, we're not going to get those jobs anymore in the same way. We're not going to get the infrastructure done in the same way. We're not going to get that money pumped into the economy in the same way. That's not great. But the upside is, if you're really worried about inflation, that's potentially an inflationary event. It's pumping even more money into the markets. So that potentially tapers that back. And also, it means that the tax side of it is potentially not going to get done, right? Which means that corporate tax rates should improve, and maybe the tax increases on the wealthy, people who make more than $400,000 a year, which is your CEOs and your CFOs of public companies, is not going to increase, potentially not going to increase either. So that's kind of the silver lining with both Omicron and infrastructure potentially not getting done. So my thought process coming into today, and again, this is the qualitative thesis. You guys know the way that I like to trade is I like to analyze all of the different aspects of the market to come up with like a qualitative thesis for the market. I think the market should go higher or should go lower for the following reasons. I think that we should see money rotation for the following reasons, or that this sector should be higher for the following reasons. But then we need technical confirmation. So that's kind of my broader thesis. And my broader thesis, I really think, is that we're getting past a lot of these things, a lot of these events, which have just made these last 2 months so brutal. And I know you don't really see it too much, not too much, in the SPYs or the Qs. You certainly see it here with the chart of the Russell, and you certainly see it if you type up, pretty much any speculative stock that had a, big run kind of earlier in this year. And there's just so many of these names. There's a massive list. We've all seen the statistics of stocks that are down, 40%, 60%, sometimes even 80%. So again, all this is coming together in such a way where we started to see that bid come in a little bit on Friday that got me excited. Then we had all the headline news hit over the weekend that caused everything to gap down. And I wanted to see if I could get some sort of technical confirmation if that rotation today was going to continue, or if I can come in and start being a buyer. The first thing that made today's trading session actually a little bit difficult was how far off the pre-market low we were by the time the market itself actually opened. So I woke up at 4:45 a.m. this morning. You can even see, for some reason, right at 5 a.m., they must have known I was coming in to start buying. The market had a big uptick here. But I woke up at 4:45 a.m. I started buying some Apple and some SoFi specifically, and then was looking to be able to do more buying. But, again, 4:45 in the morning, 5 o'clock in the morning, the markets are so thin that it's difficult to kind of do too much buying. But the degree of the gap down with my thought process, and we know that the IWM has this huge support area between 207 and 210, and the IWM had just ticked below 210 at that point this morning and was on its way up. I'm coming in and I'm initially looking to be at least a small pre-market buyer, and then I'll see where the market opens. Again, the difficulty was how far away we were from those pre-market lows by the time the market was opening. And it doesn't look like much here when you're just looking at my pre-market chart, but that's just because ranges have gotten so big now, right? SPYs were trading below 452, and we're in this 455 range by the time we're opening. We're $3 off lows in the SPYs. It's a decent move, right? So that was what was making things a little bit trickier. But my initial thought process was that we could try to be long versus an opening low when the market provides it, or versus pre-market lows. And both of those things broke. And that was the other thing I said in the morning meeting. I was like, look, guys, I got my thesis. I got to let the price action confirm it. I want to come in and I want to be a buyer versus what that opening low is. But if that opening low breaks, I got to get out of the way. And very specifically, I wrote into the VTF, because I was off the radio at that time, when this opening low that was established at 950 for the IWM broke at 1045, and I know that it turned out to almost be near the low of the day. This is actually what made today's price action so tricky. It was such a weird non-capitulatory bottom on the intraday of the market today. But when we broke this low, I was like, guys, I gotta stop myself out of stuff. I gotta take a step back here. We broke the opening low, and you just gotta take a step back. But I also know that is occurring within this really important support level, and I also know that at this point we're super oversold on all different time frames, and so that's kind of what the thought process was kind of coming into today. But we needed a technical confirmation, and honestly we didn't get the technical confirmation. We just didn't get it. Like, the pre-market lows broke, the opening lows broke. Today's intraday trading was really difficult. You can look at the SPYs, you can look at the Qs, you can look at the IWM. Like, we're down huge. We're trading lower. There's no low of the day. This is the low of the day here, 1135. This is kind of a rounded reversal. Rounded reversals can be really difficult. We want capitulatory bottoms because they're much more tradable. But basically, this market makes its low here at 1135. It's not a great time of the day. There's no increase in volume at all here. It's actually your typical midday lower type volume. We have this sideways back and forth action. There were a couple fits and starts, one of which was here at 1150. I remember seeing this candle come in at 1150, and I was like, it's a good looking candle. It kind of broke up a little bit higher on some levels, but you can't trust this candle 1150. I'm not acting on this. And we never broke lows from that point on. We did pull back. This price action was very sloppy. We had another nice little uptick here at 135. But even the 135 uptick, I was like, this looks better. But it's the same thing. The time of day, market broke its opening low. I still want to be coming in and being a buyer. I didn't think it was responsible to do any heavy lifting between 11 and 2, and then even post 2 o'clock, there was no real signal here to do anything. And I know we kind of rounded up here to more or less close where we started, kind of close that highs for the SPYs, and it gives us a decent looking daily candle. It's a decent looking daily candle. Not fantastic volume on the day today. We're also in a holiday week. Friday was also particularly high volume, so it kind of shadows it a little bit. But it ends up being a decent looking daily candle, albeit on what was, once again, very difficult price action. Let me go to the Qs before I go to the IWM. Qs, I don't know. It's not a fantastic looking candle, to be honest with you. but it did close above some support. I do still want to see if we can get continuation of that money rotation from Friday further into this week and next week. I didn't really see it too much. It seemed like off the open, some of those stocks are trying to be really strong, and then it was the usual thing. Early on in the day here, when the markets were still weak, we had some of these other stocks trying to be strong. We had some great call-outs. Let me be honest, I had some great call-outs in a few stocks off of the 9:50 a.m. bar. I think I called out particularly into the VTF. I was like, guys, versus this 9:50 a.m. bar low here, you could be long SoFi, you could be long Fubo versus this low, you could be long DKNG versus this low, and they all turned into being really good trades, especially the SoFi. SoFi was my favorite today because it got that initiation from Citi as a buy with a $20 price target. I was actually buying SoFi pre-market closer to $14. That was before I think the Citi news came out, so I got a little bit lucky with that one. But then, you know, you look here at like 10:20 when these stocks were kind of making what ended up being the high of the day, and you just still had the market pressure coming in. The market pressure was still really weighing on this stuff. Apple was not looking great at this point, though it never broke its opening low. SPYs were grinding to new lows. Qs were testing this range support and then eventually broke that range support. IWM broke its opening low, and that was basically the kind of the problem. I had these stocks, and we've seen this happen a handful of times in the last couple of weeks, where I got these stocks and they're looking really good, and it's always the same story. These stocks are looking better, but if the market stays heavy and stays weak, then these things aren't going to be able to really perform. And it looked like they really wanted to go. That execution that I called out off the 9:50 a.m. bar, I think was really solid execution. And then, you know, even the SoFi, which was like the strongest one here off the open because of the initiation, went green really early. We're excited about it. Some of us were in it off the open. Some of us were in a pre-market. Some of us bought off the candle that I called out. It ended up just kind of losing its steam and just kind of going sideways and kind of doing nothing, and we never saw that money rotation that I was looking for kind of really come into these things, which, you know, it just is what it is. It's very difficult to try to I don't want to say pick a bottom, because I'm not trying to pick a bottom. I'm just trying to pick some strategic spots for larger retracements, just given the degree to which so many of these stocks are kind of absolutely destroyed recently. That Airbnb was a good one too. I called that out in the morning meeting, but I never actually went to it. But the market just didn't participate, at least not at that time of the day, and it was a little bit difficult, and we never saw the rotation. But I still want to see if that rotation comes in this week. And even though the price action, the actual execution of my thesis today turned out to be extremely difficult, I still think that thesis is intact based on the close of these daily candles. SPY candle here looks great. Q candle looks whatever. The Russell candle, I think, looks great as well, giving a hammer into a major support zone where maybe we can get some further execution to the upside tomorrow. But execution, as we know, execution is everything in this business. And the fact that the markets on the intraday made it so difficult to execute that it's just so hard, because if we gap up tomorrow, I'm going to be super annoyed. I'm going to be super annoyed. I mean, I guess not that annoyed because I'm still pretty long, so I'll be making money. But I'll be super annoyed about how difficult they made it to get stock. There was no capitulation today. And if you bought any of those names I called out, when I called them out, they ended up breaking those lows. SoFi broke that low. DKNG broke that low. Fubo obviously broke that low. They just made the execution to be able to enter really hard. It's really difficult today, even though, again, to go back to the daily candles, you look at these daily candles, you kind of want to be closing out long right now with these daily candles and with our understanding. The daily candles are giving some technical confirmation to what my thesis was. But the problem is going to be if we gap up tomorrow. Let's say we open up at we're at 456 right now. We open up at 458, 458.50. It's very reasonable for the market to gap up $1, $2, something like that. I'm going to be looking at this and I'm going to be going, man, I really want to buy. Things look right, but where do I give the executions to because we're so far off of our lows from yesterday? Maybe we get blessed with a gap down tomorrow that leads to a buying opportunity off of that. It doesn't look like it. It looks like we're going to gap up tomorrow and we're going to just have a continuation of what's been very difficult from an execution perspective. So that stinks. I don't know what else to tell you about it. You know, the market doesn't always give us those perfect setups. It would have been so amazing today if we could have gotten some sort of capitulatory event into support, right? We know that there's some support here at this 450 area on the SPYs. We know that there's huge support between 207 and 210. It would have been amazing today if after this opening low broke for SPYs in the IWM, instead of having this low volume garbage grind that we got, this garbage reversal grind, that we really puked down. We escalated to the downside, broke through 207 on the IWM. We're down, 3.5%. And then the volume is all kind of coming in. There's huge extension on multiple time frames. We get that big intraday capitulation. I'm yelling at everybody in the VTF that now here's our signal. We got to do the buying. And then we close the way that we closed. And then we have even bigger candles with bigger tails for the IWM. And the SPY maybe is doing the same thing through 450. Like that would have been giving us like the ideal trader execution that we're all looking for. And guess what? Sometimes the market does that, and a lot of times the market doesn't. And unfortunately, once again, the market didn't do that. And that's been one of the hardest parts, I think, about this market these last couple of months, is it's not that we haven't navigated the market decently well the last, 2 months. I mean, I should really say since starting mid-November, because the second half of October and the first half of November were actually really easy. But since mid-November, it's been significantly more difficult. It's the last little over a month now. And again, it's not that we haven't navigated it well. It's not that our big picture game plans haven't been pretty consistently good. We've been calling the tops, basically, that $400 in the Qs at resistance really well. We've been calling our daily lows really well. It's just been a matter of execution. The execution on this environment has just been so difficult recently, and today was unfortunately no exception to that. So again, for myself, I'm long. It looks like we'll gap up tomorrow, but who knows exactly what's going to happen, and who knows exactly what headlines could hit overnight. But this is a really productive looking daily candle, especially based on the thesis that at least I have based on the failure of infrastructure and the coronavirus escalation here, kind of with this market environment, and how that also affects inflation. I think that we upticked inflation. I think we upticked inflation on this last CPI and PPI numbers that came out, and who knows if the Fed is actually going to even increase interest rates 3 times next year. I was thinking about it, and also Brandon was kind enough to send me, was it Paul Kruger? Influential, Krugman, who, very influential economist. So I kind of read through that today, actually, even though he sent it to me on Friday. And it really didn't tell me anything I didn't already know. It's a cool article on inflation from a very well-recognized economist that I would recommend that people read if they can get their hands on. It didn't tell me anything I didn't already know except one thing. It told me one thing that I didn't really know, and it kind of added to my thought process a little bit today on the whole inflation thing, and it further made me think. So I still am in the team transitory, I guess, on inflation, even though it's lasting longer than people initially expected. It makes sense to me. I just think that what has caused this recent spike of inflation isn't something that's going to last. But when he talks about the inflation in this article that actually occurred in the 1970s, what he really talks about why inflation became so sustained is because the inflation that was occurring in the 70s started to get built into the expectations of workers, employees, and the companies that are setting prices. And since it started to get built into expectations, then just like how markets work, it kind of became a feedback cycle where it enabled that inflation to persist. So as long as inflation doesn't start to get built into the expectations of the companies that are setting the prices, then it still can be transitory. And that even could be, maybe this is the most brilliant thing that Uncle Jerome has done if he's actually thinking this deep into it. This is like some fourth level thinking. Maybe it could be that he is shadowing this 3 times interest rate increase. And I've said this in the past too. How many times have we seen, not even with Powell, but with like Janet Yellen, how many times have we seen them say, here's the dot plot, here's where we expect the interest rates to increase, and then push it back? I feel like I've seen that happen so many times over the years. So I wouldn't be surprised if that happens, and I wouldn't be surprised if he is just kind of doing it a little bit to tamper down the expectation of inflation from the people who are setting the prices, so that doesn't become a feedback cycle that leads to more inflation. And if that's true, I think it's brilliant. So anyway, a lot of conjecture in there, and we're gonna see how all that kind of plays out over time. But the broader point, just at the end of the day today, markets gave us bullish looking candles. I think especially so with the SPYs and the IWM. I want to see if we can get more of the money rotation that we saw on Friday coming into the market this week and next week, though we didn't see it today. Maybe we didn't see it today just because of the broader fears about Omicron and everything else that was going on, maybe increased correlations a little bit. I want to see if that's going to continue to happen or not, because it didn't today. And that's pretty much it. And as far as trading goes, I'm very focused on the big picture right now and deciphering this big picture and deciphering this money rotation, because I think all small picture trading has to come from a big picture thought process. And from a small picture, we did have some okay stuff out there, I think, as a team, even if some of it was unable to give follow through just because of kind of the timing on when we bottomed intraday today was really difficult. So I guess with all that said, I am Aaron, you know where you're getting that quote from, right? Aaron N. That's from us. It's one of my favorite sayings, but I try not to say it anymore because it's not appropriate. I guess with all that said, again, I am that one goes back for years. Hey Judy, it's good to see you. Of course I do. I am happy to answer any questions that any of you guys have about anything. So I'm going to scroll up into the VTF here to about 10 after 4 and take a look at what you guys had to say while I was kind of giving my little spiel there. Yeah, so first of all, Micron's earnings are stellar here. We got Micron beating EPS, crushing their sales estimate, not crushing it, but beating it by a bit. And guidance is also a beat. Guidance is a nice little beat, looks like. And guidance is key for this market right now. So we can see this MU is trading up big here after earnings into this $87 resistance. We can revisit that tomorrow morning. All right, scrolling through the VTF. Still scrolling through the Oh, we had Nike report also. Is Nike up? Nike looks like it's a little all over the place. Oh, it's up a few bucks. Nike is one of the few stocks I think that I've seen over the course of my whatever it is, 12 years with T3, that always seems like it is up after earnings. I feel like it's gone up after every earnings report I've ever seen, except for maybe 2 or 3 at this point. So Nike looks like it's a solid EPS beat and also a sales beat. I'm inclined to think so as well, Dan, but we'll see. If it is, it's definitely going to be obviously a New Year thing at this point. From Sebastian here. Hey, Derrick, today I was looking at AT&T. All right, AT&T was on our radar today as well. We spoke about looking at AT&T versus the area of Friday's high as a trade. You have some resistance here at 24 because that's where it broke down from. You have a great-looking Maribozu from Thursday, followed by an inside day on Friday. So you have an inside and up through resistance today. So this one was on the radar. And this was actually spoken about in the VTF when it was making lows at 935. I think a couple of traders in the team maybe were looking to try to buy it. I actually thought it was difficult. I didn't like at all the way that they sold this into the gap and filled that gap in the first 10 minutes. Yes, a technical common gap fill is normal, and a common gap fill oftentimes does act as support, which is exactly what happened today. And it was also followed by an inside 5 and up, which could have made this something that you could have executed. But I did think that this trading action in this was difficult because I didn't think it should have filled its gap. And this was when the market was still holding up. Right? The second 5-minute bar of the market today was actually decently strong. So I didn't like that AT&T, which is upgraded and has this great looking daily chart, was filling its gap while the SPYs were actually upticking. So that was kind of the thing that turned me off from getting involved in AT&T today, even though it was on my radar of kind of top stocks to trade today. It was difficult. I do think some of the people on the team caught it. Let me read the rest of your question. So you liked it above 24, and it got an upgrade, so it was gapping above. So technically it's a potential breakaway gap on news, which is also something I really normally like. In PM, I don't know what that means. There was resistance at 24.20. Oh, the pre-market. And I wanted to ask you how to execute in this case. Try to buy the dip at 24. We're waiting for confirmation for 24.20. Also, thanks for taking the time to answer your email. No problem. Yeah. So look, if this was if AT&T was my trade, I ended up not trading it, even though it was on my list today. I think I probably would have gotten stopped out of it because I like to be aggressive as soon as the market opens. And this thing gapping above that $24 or opening right at $24 would have had me buying this thing at the open using Friday's high as my stop loss, because Friday's high is this inside daily candle, and I like that. I would have gotten stopped out almost at the low of the day today if I took this trade. Now, I ended up not being involved in it, and then people on the VTF, on the team here, actually didn't call it out until this candle, basically until the low of the day came in. So I think maybe some of you guys caught it. But for me, I never wanted to get involved for kind of the reasons that I explained. At this point, I already wasn't involved in it. I would have gotten stopped out of it if I was, and I didn't like the relative weakness. I didn't like the fact that the SPYs just ticked higher in the second bar of the day, and this thing was actually selling back down and filling its gap, even with an upgrade. I just didn't think the price action looked right. Obviously, if you did take it, it kind of would have worked from that point, though even then it wasn't that spectacular and kind of closed just okay. So that's what I would have done. I don't know if that helps you exactly. The 24.20, I guess let me take a look at the pre-market. I don't think that matters to me as much in this situation. Yeah, there's a little bit of resistance pre-market at 24.20, but look at the volume. There's no pre-market volume going on this thing. So without any pre-market volume, I don't really care about this 24.20. I'm definitely not waiting for the break at 24.20 to buy it. I'm buying this thing probably right at the opening, getting stopped out personally. I also could see getting involved in it in this area, especially with the inside 5 and up as it's breaking back through 24. But I already explained why I thought that trade would be difficult. Jonathan here, the action today does not make me think that we saw the low. They gave you plenty of time to get stock, and that means it's not good price. I don't know, I'm flat overnight. So I definitely agree with at least part of that thought process there. There was no capitulatory action today. I love capitulatory action at lows because it really signals that you're getting a final flush out of the people who are already long, and it's the smart hands who are able to come in and kind of take that stock. And we didn't see that. I love seeing that when we're at lows. We didn't. So I don't know. With that said, though, I kind of don't think that we would have seen any of these prices today if it wasn't for the headlines over the weekend. I thought that price action was so good on Friday that it was actually starting to signal a bottom in the speculative stocks. That's the first time I really thought maybe we were actually seeing like a bottom. Like there's been plenty of times where I was like, I want to try it for an oversold bounce. And I don't even want to say that word because I hate saying that word. It's exactly like Aaron already said, which I'm not going to repeat. Aaron N. Picking bottoms is generally going to be a fool's game. But I really thought that price action on Friday with the money rotation was the most productive price action we've seen for some sort of bottom. Because this is also one of the most unique markets I've ever seen. I've never seen a bear market where we're at all-time highs. It's kind of what we're at, right? What's the S&P, like 2.5% off its all-time highs at this point? NASDAQ, very similar. IWM, fine. NASDAQ maybe a little more, 4%, I don't know. IWM, fine, probably off 12% or whatever from its high. So the Russell is actually in correction territory. But very broadly, what do I mean by that, right? I've never seen a bear market where the market's at all-time highs anywhere in my career. Every other time I've seen very heavy selling to that degree in certain parts of the market, it's been kind of coupled with a bigger market correction. So Friday to me, plus the timing into the end of the year, kind of actually signaled that maybe, just maybe, even though I don't like to officially call this stuff, maybe, just maybe, we actually have a real bottom coming into spec type stocks. And it's with the market at all-time highs. But, some of those stocks are like literally in depressions. They're beyond bear markets. So we will see. Mike's off to get his booster. Awesome, man. Love to see it. Awesome, Judy. Welcome to the room. Tell Cammie I said hello. Scrolling through here. Next I'm seeing is a question on VCRA. What are my thoughts on it? What is this company? Vocera Communications. So I'm not familiar with this company. I love this chart though. If you want, I can't tell you anything about the company. I can tell you pure technicals. Technicals in this chart look phenomenal. Weekly bull flag broke out. This weekly bull flag broke out today. Stock is up 5% when the market was really weak today. I don't like the average volume on this thing. It's a little thin for me. But if you're involved in this already, you're looking great. I don't think I would buy it tomorrow because then you're chasing an extended stock. 4 up days in a row, you don't want to come in on day 5 and do your buying, especially, stocks at 64.25, ADMAs at 60.25. You're looking at a stock here that's, extended by its ADMA by $4 and a $60 name. It's too much to come in and buy if you're not already in. If you're already in it, the technicals on this thing look fantastic. Book a little bit of profit, make sure you have your risk covered, and then just trail to try to maximize your reward. So good stuff. Good stuff. JD keeps heading lower with Baba. That's a question for Pat, so I'll leave it for Pat. I'll take a look at it too, though, because I like these Chinese stocks. Yeah, I mean, there's a lot of macro stuff that still keeps affecting these Chinese names, but broadly, I really like Alibaba at these prices, and I say that like almost as more of an investing hat than I do a trading hat. These prices are silly for Alibaba for this company. Though JD's been my favorite in the space. Look at the sell-off in JD. JD's really extended the downside, but it's also been super volatile, and your bigger support's down at 62. If we could get like a reason for this to be down one more big day, then I think you got to come in and start looking for buying opportunities in JD.com. Really good company out there in China. And again, to help you mitigate the broader Chinese risks, you want to be involved in the Chinese majors. I like Alibaba, I like JD.com, I like Baidu, I like Neo, I like XPEV. That's about it. Those are really the ones I want to primarily focus on. Next here from Aaron M. We have an Aaron N and we have an Aaron M. I love it. Are the SPYs and AT&T correlated to make that assessment? Yeah, so though, yes, they're correlated enough for sure. AT&T is kind of it's a dividend play traditionally. There's obviously a shakeup with the company right now with their spinning off of Warner Media, which Discovery is buying. It just wasn't a good match for those two companies to begin with, in my opinion. Yeah, AT&T is more about dividend investors want to be buying and holding this thing, whereas like a Warner Media is more about like valuation and growth and it's more about valuation and growth and multiples and multiple expansion. More of like your Netflix kind of business model. HBO Max and everything that they've been doing there. But just made it like a really awkward kind of tie-up. But honestly, I think Discovery is kind of an awkward tie-up as well. I don't know how well that's going to last. But again, to just directly answer your question, yes, there's a correlation between the SPYs and AT&T for sure. Next here from Tommy Pham, where I say that AMC is very likely to touch 36 to 38 for an opportunity to enter the short. I've been watching the IWM, but no follow through on the short side today. Sure. So I have gotten out of my AMC short last week. I did phenomenally well with it. I will look to reshort it. I was initially looking at starting around 31.50. Doesn't mean that I'm going to. And for me, it's part of a bigger game plan to short this thing, where it's almost a continuation of the trade that I still have, where I'm short from like $60 over here. So I would probably will look to start really small in the lower 30s. I would look to get more aggressive if it can get into more of like the $40 area. But it's a big if. The apes are strong. I know that there were a couple good movies that like came out over the weekend and people were in movie theaters, but I mean, it used to be a regular occurrence back pre-COVID that you would have movies that were full and the stock was traded at $15. So now we get one or two movies that get the movie theaters a little bit more packed, and the company is worth more than double what it was worth then, even though the float of the stock is higher than it was. I don't think so. But again, we know that this company has not been trading on fundamentals. It's definitely been trading on price action and technicals. So that's where I'll start to look to short. I'll become more aggressive in the $40 area. But do I think it's actually going to get up to that area? I kind of don't. But I also wouldn't have expected it would have been up 25% on Friday either, and it was. So we'll continue to monitor the price action in that one for sure. Judy asking about Microsoft. So Microsoft is one of my favorite companies in the market. I absolutely love Microsoft. I'm not personally ready. So first of all, we got a big support area here. So we want to see 316 hold on the downside. We don't want to see Microsoft lose 316. I thought the price action was productive on it today. I'm not personally ready to size up again in Microsoft, though. I do still have a position in Microsoft. I also have a position in Apple. By no means does it mean that I'm bearish in it. I'm bullish in it, but I'm not quite looking to get heavier yet. And the reason why is really because of the price action that we saw on Friday. I still think that we might see, and this could happen with the whole market broadly moving higher. So Microsoft could move higher, Apple could move higher, but I still think that we are going to kind of broadly see this week into next week money rotate out of consumer staples, utilities, and possibly FANG stocks, and see some of these more beaten up stocks catch a little bit more of a bid. So I'm more interested in seeing for the next couple of weeks if energy is able to catch a bid, if materials are able to catch a bid, and if our broad list, I know you just joined the VTF, so you probably haven't seen that list yet, but as a team here we have like a big list of what I call these heavy speculative stocks. Many of those are down 30 to 80% from their highs on the year. Many of them are even down 50% from their highs in November. And there's a bunch of reasons that we've been spending a lot of time talking about where I think that we're going to see a little bit more money rotation come back into those. So it's kind of because of that I'm not ready to rush back into Microsoft and Apple heavier. But broadly, Microsoft's my favorite company in the market. I've been basically long this thing straight for almost 7 years now. Love it. And as long as it's above 316, it still looks just fine technically. And a nice little inside day today, so let's see if we can get an inside day and up tomorrow, which actually could be a signal to add. If we break above today's high tomorrow, it could be a signal to get even a little bit heavier. There you go, Aaron. CPA, very nice. Awesome. I'm excited to have you too. They issued 500% more shares, says Stefan, on AMC. 500% more shares, yet it's trading at a price that's double where it was trading before COVID was a thing. It's insane. But markets have been kind of nutty for a little while now, so we'll see. Yeah, Jerry, I think a solid B+, AT&T off the open. I think there's a lot of things to like about that AT&T trade off the open. And I said it in the morning meeting too, like, this is not normally the stock I'm going to. But it's been pretty beaten up, especially for a dividend name. I wonder what percent the dividend is now. And, you know, back above $24 here, it's looking good. But the intraday on it was tough off the open. Talk about financials. Yeah, let's take a look at financials. So financials got hit really big today, and that was despite the fact that there was not too much of a movement in the TLT. So TLT being down today, which is interesting because it means that it's a signal of there not being a ton of fear in the market. TLT being down today means that interest rates were higher. Interest rates being higher, generally good for financials, though we also want to see what the yield curve is, because the yield curve also has a big effect on the financials. And interesting to see that this XLF actually pierced its 200 day today. We have a tail here below the 200 day. I like financials right now. I honestly, how did XLE close? I want to take a quick look at that. Ooh, not good. XLE did not close well at all. All right, so maybe XLE needs a little bit more time, but it's super extended to the downside. But financials gave a good tail through their 200 day. So you could try to be long, I think, these banks versus today's low tomorrow. And I still like them. I still think that the financials are kind of positioned well for the future. Though they took an interestingly large hit today. And I don't really know too much what to attribute that to be totally honest with you, Varun. Bank of America below support, but an okay looking candle. Goldman below the 200 day, also below support, but a good looking candle. Oof, Citi chart is not good. Morgan Stanley has probably been one of the best ones for a while now, actually. Yeah, Morgan Stanley holding above 94 is solid. What's a misprint in the XLE? Oh, did it close on lows? Oh, got you. Thank you for that. That's good information on Gabriel. This is not what the XLE candle looks like. XLE closed on highs today. XLE closed at 53. Yeah, so XLE is given a fantastic looking daily candle also. There's just a misprint here. There's a 5090 print in the tape. For whatever reason, 5090 out of market print for 100 shares in the tape that's messing up the a daily candle. So I really like how energy and financials and materials and spec names are kind of positioned going into the rest of this week and next week, especially after the price action we saw on Friday. They just kind of threw a little bit of a monkey wrench into things with the headlines over the weekend, which is, you know, that's why we sometimes see de-risking into the weekend, right? We saw several Fridays in a row where we saw de-risking on a Friday because people were afraid to hold things over the weekend because of the headlines. All right, gang, it is 5 after 5, so I'm going to end today's afternoon meeting. It was not the easiest trading session in the world, but overall, I'm kind of happy with how this market is starting to position itself, and we'll see how we gap tomorrow. Hopefully, we don't have a big gap up tomorrow, because I think if we have a big gap up tomorrow, it's going to make for difficult trading it's a difficult open again, and it's kind of been a consistent theme recently, is that these opens have been difficult. But we'll assess that in the morning. So you guys all have a great night, and I will see everybody then.